Hi traders, you're welcome back to the Forex Geek channel. Have you ever entered a trade only to realize that you are trading against the bigger trend? Well, that's where top-down analysis comes in. It is one of the most effective ways to analyze the Forex market and find high probability trade setups. Okay, so in this video, I'm going to be breaking down top-down analysis step by step so you can learn how to read the market like a pro. Okay, so stick around because I will show you the biggest mistakes traders make when using this method and how to avoid them. Before we dive in, don't forget to hit that like button, subscribe, and turn on notifications so you never miss a trading tip. Okay, so let's just get started. Now, what exactly is top-down analysis? In simple terms, it is the process of analyzing the market from the higher time frames down to the lower time frames. Right? So instead of jumping straight into a trade based on a single chart, you first look at the bigger picture to understand the overall trend. Then you zoom into smaller time frames to refine your entry and exit points. Okay, this method keeps you aligned with the dominant market direction and helps you avoid false signals. Okay, so let's just break it down step by step. Now, step one is looking at the higher time frame, all right, such as the daily or even the weekly. Yeah, you can actually use the daily chart or the weekly chart. This is where you analyze the market's overall direction and key levels. Okay, after that you ask yourself, is the market in an uptrend, downtrend, or consolidation? You look for major support and resistance levels. All right, look for major support and resistance levels, horizontal support and resistance levels. Draw your trend lines and then watch out for price action patterns. Okay, the goal here is to determine the market's bias. Are buyers in control or are sellers dominating? These are questions you'll be asking yourself. So once you've identified the overall trend, it is time to zoom in. Now we move to the mid time frame. Okay, the mid time frame could be the 4-hour chart or the 1-hour chart. Okay, now this is where we refine our analysis by looking for price action signals and confirmation of the trend direction. So here's what to focus on. Is the price respecting the trend from the higher time frame? Remember that the trend from this higher time frame is generally a sell trend, right? It is generally a sell trend. So here we will be asking, is price here respecting the higher time frame? Are there any chart patterns like double tops, double tops or double bottoms, head and shoulders, or triangles, any of such? So here we can see that we are still having a sort of well, it's like we are having a ranging market. Even on the higher time frame, we're having kind of a consolidation market. Yeah, but here we can see that in our mid time frame, we are still having that consolidation. Consolidation is still prevailing, although scalpers can be able to catch some good moves because it's quite a wide consolidation. It's not a tight range. It's a wide consolidation. So scalpers can be able to catch some good moves even within this wide consolidation, right? Then you'll be asking yourself also, can we spot key supply and demand zones? You should be asking, are there key supply and demand zones? And considering the fact that this is kind of a consolidation phase, then yes, you can see that we have a demand zone around here. You can see that we have a supply zone around here, right? You can see that we have a supply zone around here. Okay. Right. Now, this step helps us build confidence in our trade direction before moving to the lowest time frame for entries. Now, once we have confirmation, let's just fine-tune our entry. Okay. Now it's time for the final step. Finding the perfect entry on a lower time frame, such as the 15-minute chart or the 5-minute chart. Okay, so on this chart, we are looking for entry triggers, right? We are looking for entry triggers such as candlestick patterns like engulfing candles or pin bars, and we'll also be looking out for break and retest setups, around the key levels that we've already identified on the higher time frames. Okay, then you can add moving averages or any other indicator of your choice to confirm momentum. All right, so by aligning our entry with the higher time frame and the larger trend, alongside, basically market structure, right? We increase the probability of success while keeping our stop loss tight. Okay, so this step allows us to maximize our risk to reward ratio while staying in sync with the overall market direction. Okay, now before you start using top down analysis, here are a few mistakes that you need to avoid. The first is ignoring the higher time frame. All right, trading against the main trend often leads to unnecessary losses. All right, and you would not want to experience that. Secondly, do not overcomplicate analysis. All right, overcomplicating analysis is another mistake. Stick to clear trends and key levels. All right, do not add too many indicators. Okay, do not do that. All right, you want to keep your charts clear. Okay, doesn't mean that you can't add a few indicators. You can actually, but you don't need to add too many. Okay, it's going to cluster your charts. Thirdly, do not rush into lower time frame trades. Okay, always confirm your bias with mid and higher time frames before entering. Okay, so you can do your first analysis on the daily time frame, get the overall trend direction and all of that. Then you can refine your trades on the 1 hour chart or the 4 hour chart. Once you're done with that, you can go down to the 15 minutes time frame to look for precise entry points, conclude your entry and exit strategy down there, right? So by avoiding these mistakes, you make smarter and more confident trading decisions. All right, now let's just do a quick recap of the steps for top-down analysis. Right, the first step is to start with the higher time frame, which could be the daily or the weekly, okay, to determine the market direction. Then the next step is to move to the mid time frame, which is the 4 hours or the 1 hour, to confirm your key levels, right? To confirm your key levels and your patterns. Okay, then the third step is to zoom into the lower time frame, which could be the 5 minutes or the 15 minutes time frames, for precise entry points. Now I want to hear from you. Do you use top-down analysis in your trading? Drop a comment below and let me know your thoughts. If you enjoyed this breakdown, make sure to hit that like button, subscribe to the channel, and turn on notifications so you never miss out on future trading content. In the meantime, thank you for watching, and I hope to see you in the next video.